विद टाइम्स 62 सालों से हर जनरेशन की पसंद।
Well, it's countdown, and thanks so much for tuning in from both Agam and me. Mahindra & Mahindra has reported numbers, net profit at 1650. Don't look at the versus estimate number because there are some exceptional items out there in the M&M numbers, 137 crores of exceptional gains and maybe some more. But if you just look at the revenue numbers and the margin numbers, seems to be in line with estimates. Vinita Sharma, Head of Research at Narnolia Financial Advisors, joins us right now on the show. Vinita, good having you. Thanks so much for joining in. Your initial take on the numbers?
See, if we consider the Mahindra along with MVML results, the top line that we were expecting is a little lower than what we were expecting, around 12,800 crores, which is around 12,790. And even on the EBITDA front, margins were expected around 15.3% on the combined the MVML. But this is around, I can see it is around 14.5%, a little bit lower than what we were expecting. Yeah, already we were expecting a lower margin because the tractor volume had slowed in this particular quarter because of various factors. And the tractor margin is normally around 21%. That was around in Q1. And the farm equipment segment, that contributes around 32% to the total revenue. So if that margin, that volume and the volume contracts, definitely the margins will be under pressure. But PAT is definitely higher than what we were expecting, maybe because of other income. I'll have to do more of, number crunching and seeing the whole report, which I have not been through.
So, Vinita, from what I understand, are you attributing the slight miss in margins on account of the slowdown in tractor business, considering it is essentially the tractor business that drives profitability for M&M?
Yeah, because, as I said, the tractor business margins is around 21%. And right now, the whole farm equipment segment, that is contributing 32%. The management is targeting of, increasing this segment revenue to 50%. In the next 3 years. But that's because of, lower volumes from the tractor segments because of rain deficiency in Bihar, Maharashtra, Gujarat, Andhra Pradesh, and also because of the weaker operating leverage is what I can focus that this kind of margin pressure must have been witnessed.
Okay. Vinita, what does this do to the stock though? Because the numbers may be slightly lower than what you were working with. If I just look at the Bloomberg estimates, they seem, there is hardly a miss. 14.5, the estimates were 14.6, which was the consensus estimate. The consensus may think as they do, but what is your verdict on the stock now post the numbers that have come in?
See, overall, if you look at Mahindra & Mahindra and the kind of placement that the company is doing, if you look at the commercial vehicle segment, that has grown pretty good. The volumes were good. And even the passenger vehicle segment, that was a little down, but then we are seeing a lot of new products coming. We are seeing Marazzo, which is already there, launched. We are expecting another Alturas launch in somewhere around end of November. So these are there are new products which are coming, which should drive Mahindra towards better sales, and we are overall positive on the kind of segment that it caters. And even considering the valuations, I think it's a fair bet to have in a portfolio.
How are you reading the response from Marazzo going in, and also what would you like to know from the management as we move into the next, say, couple of quarters?
See, overall response from Marazzo looks good. There is 1.5 months waiting period for the segment, and but then definitely once you have more of launches that comes up, then obviously the other expenses, the ad expenses, and these are expenses will go higher, and that also should in a way contribute to lower margins in for a shorter period of time.
Okay. If I were to ask you, Vinita, final question from my end, if I were to ask you for a pecking order of what would the auto space be, and what is it that you would look to buy post almost all the numbers that are out now with M&M being out as well, what would that pecking order be?
So in auto segment, we have the two-wheelers and the, you can say four-wheelers or the passenger and all together. So our pecking order in the four-wheelers would be Maruti and then Mahindra and Mahindra. And in the two-wheelers, we are liking Bajaj Auto.
All right, Vinita, finally, a question on your valuations. How are you reading M&M? On an absolute terms with the price at which it's currently trading at?
See, right now what I can see is if as per our calculation how it goes, it is around 16 times FY20 price to earnings. And if you consider the listed space subsidiaries, they contribute around 300 or so valuation, considering some 20% holding company discount. So I think our valuation would be around 1,050 or so. That should be the target. I think, last 2 years, if you see, FY17, it was trading around 26 times price to earning with ROE of around 12.5 times. FY18, it was trading around 21 times with ROE of 14.5 times, 14%. So considering that, I think for FY20, our calculation goes around the ROE of 15.5. And that makes a P multiple at 16 times, which I think is not a very poor number to stay on.
Okay, we'll leave it at that, Vinita. Thanks so much for joining in and giving us that perspective. Really appreciate your time. That's the view on Mahindra and Mahindra. The stock lying absolutely flat right now. What's not been flat? Actually, well, it has come off a little bit in the session today. What's also come off in the session today and putting a bit of a pressure are the export-oriented themes. So just before we get in our next phoner, and an important one at that on an important topic, just highlight what's moving around. Sun Pharma is down about 7% on the results, primarily not because of the currency. But look at what's happened to IT. Tech Mahindra, ZEEL Technologies, TCS, Infosys. Like heavyweights which have corrected and corrected quite strongly, and therefore if you just look at the contributors list, I think IT, Sun Pharma and Kotak Bank would be the order. You'd probably have a couple of IT names, you'd probably have Sun Pharma, and you probably have Kotak Bank right there. TCS, Kotak, Sun Pharma, Infosys, not surprised there, and those are the ones that are putting that little bit of pressure on the markets today. Cipla has continued to correct another couple of percentage points, gone and 15% Agam in the last 7 or 8 days alone for Cipla. Right. Just shows the pressure that exists in the pharma pack.
Absolutely, and Neeraj, speaking about Cipla, there isn't a single analyst that I haven't come across in the past few days who hasn't put a short after the kind of weakness that we've seen in Cipla. And, the accumulation towards shorts in the futures and options space, the volumes on which this selling has happened, it all indicates that Cipla is, at least on a technical basis, according to a lot of analysts, heading below the mark of 500 at this point in time.
Okay, so that's of course what's happening in the markets by and large. OMC is doing well, pharma and IT not so. But OMCs are doing well for a reason. Crude prices are currently maybe little change, but they've fallen the most in 3 years in overnight trade as well. We've dissected all the reasons that could be the case. Let's get an expert opinion on what could happen going ahead. And to talk about this and more, Amrita Sen of Energy Aspects joins us right now on the phone line. Amrita, good having you. Thanks much for joining in. Overdone, you think, the correction, or was the rise overdone and therefore this is par for the course?
No, I don't think either was, because the sell-off is definitely overdone. There's no doubt about that. But the rise wasn't, because that was based on expectations that Iranian waivers wouldn't be given by the U.S. or they'll be very, very small. Then, of course, the U.S. started to give a lot of waivers because they were clearly very fearful of high oil prices. So that's what's changed. And fair enough. If the U.S. is going to give waivers, you don't need oil prices as high. But this current reduction has been way, way overdone. It's technical. It's to do with some funds getting stopped out, and also negative gamma. Essentially, there's a lot of producers who've hedged around these levels, which creates a lot of negative gamma in the market. So the sell-off has been clearly driven by technical factors and not fundamental factors.
Amrita, but let's assume that the OPEC cuts come in as Saudi Arabia is saying. Donald Trump is out there, and we've seen in the past that when US is making those broad comments, certain OPEC members are not playing ball in terms of the cuts too. So if the cuts were not to come about as pronounced as people might fear they would, I'm not saying a level of 65 for crude and Brent, that is, but do you reckon that for Brent a safe assumption is a level southwards of 70 or 75? Are the days of 85 and 90 out of the window for the time being?
No, I don't think so. I really think it depends on how much OPEC ends up cutting. I think OPEC will be very, very clear in its messaging that irrespective of what's going on in the U.S., the reason they were asked or forced almost to increase production, preempting the Iran fall, is it was on the proviso that the U.S. is not going to give waivers to Iran. Now Iran has been given waivers, so the dynamics have changed. I understand politically it is very complicated, especially given all the kind of tweets that Trump's putting through and all those other factors. However, I would wait and see what happens on 6th of December. If the cuts are substantial, I think it's very, very likely that we go back to $80 very quickly, especially because there has to be a lot of short covering in this market. The market's very short right now. If not, I think a level of about 75 is probably fair, because we will still get Iranian fall and OPEC will cut some, may not be everything. But I don't think we can rule out $80 again. It really just depends on how much OPEC ends up cutting.
Amrita, how would you correlate that movement with what you are observing and your analysis with respect to shale at this point in time?
I think the kind of other factor beyond the waivers that's happened is that U.S. production has ended up surprising to the upside. And that has definitely spooked the market. Having said that, people are using August data to extrapolate because August numbers are very, very strong. But if you listen to all the earnings calls from Schlumberger and Halliburton, the service companies, they are pointing to very, very sharp slowdown in activity because the companies have exhausted their budgets. So I think the market probably needs to wait a little bit for the recent data. But look, there's no doubt about the fact that U.S. production has surprised to the upside. And you know, in a high oil price environment, it is going to continue. But right now, with the oil price fall and with very, very wide differentials, WTI is trading at a $10 differential to Brent, Bakken is trading at another $15 differential to WTI. So break-evens are, or rather prices are below break-evens for a lot of the shale producers now.
Okay. Amrita, we'll leave it at that. Thanks so much for taking the time out and speaking to us. That's Amrita Sen of Energy Aspects, and she's of the opinion that a rise back to those 75, 80, 85 levels for Brent, mind you, is not out of the window. Currently, though, at 65 and still cooling its heels. A couple of announcements up on your screen. Cadila Healthcare, they've received final approval from US FDA for some injections, and that stock is up about 3.5%. But Zenny is up for most part of the trading day. The interesting one, though, it came in just a moment earlier, was that Gautam Singhania has stepped down as chairman of Raymond. Now, well, we'll try and pull up more details from the exchanges as to why has this happened. Is this due to health reasons or otherwise? But well, that's a sea change in what we're used to seeing in Raymond, and that is Gautam Singhania at the helm. But the stock volatile a little bit on that announcement, but nothing too dramatic otherwise. In fact, now the stock is rising. Nirvik Singh is the new chairman of Raymond Apparel, and Anshu Sareen and Gautam Trivedi have been appointed as new directors on the Raymond Apparel board. Yes, but Gautam Singh is out.
So Neeraj, I just want to come in. It's actually the Raymond Apparel subsidiary that he stepped down from, not from Raymond itself. And I think that's the reason why we saw that knee-jerk reaction and hence that recovery coming in. So that clarification is very important. It is from a subsidiary, the apparel subsidiary, and not from Raymond itself. And yeah, there you have it. That's the reason why we've seen that stock well, come back to nearly marginally in the red at this point in
Non-event.
time. It is a non-event in my opinion as well, so yes. But well, we'll move on and address Jayshree Tea, which has also reported its highest profit growth in 6 quarters. Let's get in the management of the company to understand how the quarter's gone by. We have Mr. Maheshwari joining us at this point in time. Mr. Maheshwari, who is the MD and CEO, is in chat with us. Mr. Maheshwari, good afternoon. Thank you so much for joining us. First, let me just go through the quarter, the headline numbers as well as the profitability. We have seen profitability rise to quite an extent. What's the update here? What factors do you attribute to this one?
Sir, the profitability rise is basically chemical unit has done very well, and tea, of course, is doing extremely well. Considering that the market conditions are very, very adverse, price cost has gone up, prices are not all that up. So that way it has done quite well.
Okay, Mr. Maheshwari, in that case, can you give us an idea about how pricing is at this point in time and what we can expect from the tea prices in perhaps the markets that you are present in as we move into the next couple of quarters?
Well, I feel that as on today we are up by around 8 rupees a kilo over last year, and in the balance period I expect the market will go up, and this 8 rupees should go up to around 15 rupees a kilo. Now this is based on the assumption that production, which is already behind by 3 million kilogram ending September, and now there is a regulation from Tea Board that production will be stopped from 10th of December. That would mean further 25 kilogram less tea, and combine it with the 35 million kilogram demand created every year. So there will be a bit of a scarcity scenario, and the prices should remain firm.
Okay, so we're assuming the prices will remain firm based on a slight scarcity in the upcoming months. But Mr. Maheshwari, in that case, if you could also give us an idea about perhaps your utilization and your capacity currently, any plans to go ahead and expand or not yet?
See, while I tell you that the industry will be behind, my company, because of the development work taken up by us in last 6-10 years, my company is ahead. Actually, my production is up by 1.2 million kilogram ending September. So, and I expect in the balance period, another 0.8 million will be added. So I will be up by around 2 million kilogram. And all our gardens are in high quality bracket wherever we are producing. So I expect that we will get the advantage of the high production, high prices, better quality, and this will help us mitigate the cost increase.
Mr. Maheshwari, can you give us an update on your sugar and your chemicals business as well? Because from what I understand, it has been a little bit of a drag for this quarter. Is this something that can continue for the next few quarters as well?
Sir, as far as the chemical is concerned, it has done extremely well. In fact, one of the best result ever from chemical division. And sugar is a separate standalone company. But in sugar also, we expect now that this year onwards, this cash losses scenario will be thing of the past, because our distillery will be commissioned sometimes in January. And we expect to make good money there by producing ethanol. So overall, I think the company as a whole should do very well in the balance period, the period of this year.
Right, Mr. Maheshwari, just a couple of more questions. We also want an update in your East African tea plants. If you could tell us anything or give us more color on how that particular area has been panning out.
See, African gardens, we have got 3 gardens, 2 in Rwanda in partnership and 1 our own in Uganda. So Rwandan gardens are doing well, though they are also having some price squeeze because of the Kenya production being higher by around 40 million kilogram and market down by almost 50 cents. But because of our good quality standard, we are all right. We are not down that much, and profitability levels, considering the market conditions, are quite good. In Uganda, the price levels are under pressure because of the market being very low. But still, I would say those gardens are doing quite well.
All right, Mr. Maheshwari, finally then, we are 2 quarters down and half a quarter in the 3rd quarter as well. What can we expect from your top line and profitability for the FY19?
Sir, for obvious reason, I can't quantify what exactly result will be. I can only tell you this much, that our this year's result will be far, far, far better than our last year's result. And this is in spite of very adverse conditions.
Okay, Mr. Maheshwari. Right, we'll leave it at that, sir. Thank you so much for joining us and giving us an update on the company as well as the outlook going forward. So, well, that's just one other tea major out there, who has been taking advantage of the rising tea prices because of scarcity in tea. Neeraj.
Showing in the stock price today, but the management not wanting to quite give an answer as to what could happen. But I can understand, right, Agam? I mean, the commodity space, difficult to probably give a call. Couple of results that have come out in the interim just before we get into the next corporate voice. Sadbhav Engineering, the net profit at 38 crores versus 33. The stock not having any of it, just about 15-18% again. And Central Bank of India, the net loss is at 923 crores. Another company which is nudging that 1,000 crore loss mark. The stock should have reacted ever so negatively, not too much, but down about 3%. So we come into the fag end of the earnings than the last few PSU banks, save for the one that came yesterday. I'm missing out on the name, but aside of that, almost every other PSU bank has reported numbers which have been subpar, losses running into thousands of crores, and the asset quality too not showing too much of an improvement. So just a couple of numbers that I wanted to highlight. One of the biggest voice of the day, every customer of TCS was convinced of its vision for the digital business, says its MD and CEO Rajesh Gopinathan. Speaking to Sajid Mangat, Gopinathan highlights the company's capital allocation policy and the way it plans to tackle the H-1B visa issue. Listen in.
Every single client that we spoke to completely bought into our vision. So the reason that we were so strong on our conviction was that every time I went and met with a customer, every time we spoke about this whole idea of contextual knowledge and the idea about retraining and scale and core, every single time clients were more than happy to hear what we are saying and gave us feedback that that's the right approach to take. I think there was skepticism in the external world as to whether that's the right thing to do, whether it is from the investor side or from the press part of it. But our conviction came because of the positive feedback that we were getting from customers. So clients actually loved this idea that what is required is for their environment, their context to be kept aware, and their vendor to actually upskill to get the data set so that they are not actually just bolting on digital as a standalone activity, but going through a digital transformation.
So, when you said the critics were there with respect to whether this strategy will work or not, you're basically saying that there was a proof of concept which has to be which has to play out across enterprises, and once that is through, then you have digital at scale which comes in, right? How tough was it for the proof of concept? Because I remember, speaking to you a couple of years back as well, the deal sizes were 10 million, 5 million, 10 million, and I assume that those were proof of concepts which every enterprise was trying to, test or, taste how it's going to work out. And then the scale up also happened in a big way. I mean, it's a vertical jump which happened in the last one and a half years with major deals coming your way.
So, in fact, the proof of concepts are even smaller than that. So, and as I said, the big thing is that we anticipated this scale. So we were actually preparing ourselves for this scale rather than trying to maximize participation in the proof of concepts. And looking at what are the core technologies, where is the interface with the core the most impactful, and how do we prepare ourselves for it. As I said, the biggest point was we were getting constant positive feedback from the customers, and the client-side adoption was also very high. Our internal adoption was also high because that was a big jump that we were taking, saying that we will be able to reskill our existing skill people, and we'll be able to harvest the contextual knowledge and marry that with the digital skill sets. So this whole program of what we call digital champions internally, that has been a big success. So the positive resonance we were getting both from our customers as well as from our internal talent pool gave us the conviction that we were on the right path, and went against the considered wisdom in the industry and built it out organically.
So is it fair to say that today all your clients, whether it's 10 million plus, 200 million plus, or to $500 million, all of them have at least tested out the digital product or the way it's going to move?
I don't want to say 100%, but almost everyone would have done it. I don't know which are, in fact, I'd be hard pressed to name a customer
No,
who has not had
to say 50% or 60%.
Absolutely, absolutely. But, every single person, all new projects, all new investments, incremental investments are in some form or the other leveraging parts of the digital stack. Whether that be cloud, analytics, mobile, social media, whichever automation, artificial intelligence, whichever be the aspect of it. But almost every single incremental project leverages some or all of these technologies.
We are now hearing that the entire H1B program will be overhauled. You will have, the lottery system may go off. You will only allow H1B for those who have masters from the US. There won't be H4 visas available for spouse and all. All this, when you put in together by 2019 is when it's going to come for review. Will it impact the IT industry very bad? Are we just, we're not giving due importance to this challenge which is coming to us?
No, all of us are giving full importance to it. Let me put it this way, that we have an industry leadership position, and we are among the largest hirers of technology talent in most of the markets that we operate in. And any reform of any nature, whether it be in the education system, whether it be in the immigration system, in any system, any reform that actually increases talent availability will be net beneficial. Any reform that actually reduces talent availability will be net detrimental to all the participants. So I'm hopeful that given the broad-based nature of this demand, reforms will be of a nature that will actually increase the talent availability.
My final question to you is on the capital utilization policy. You have articulated it many a times. What is, we saw 2 buybacks happening in the last 2 years. Is this going to be the route going forward for TCS to give money back to the shareholders?
So we have articulated our strategy as saying that we needed to maintain a certain core cash reserves. Beyond that, 80 to 100% of our free cash flow that we generate in a year, subject to any acquisitions or anything that happens, we will be returning it back to our shareholders. The choice of what instrument to use, how much of it through dividend, how much of it through buyback, that choice is a flexible choice, and that the board will determine it. As much from a tax planning perspective as also from the perspective that different shareholder communities prefer different instruments. So we have a fairly broad-based ownership structure. We are one of the largest retail shareholder bases in the country. Yeah. So we need to make sure that the choice of the instrument actually appeals across a spectrum of our investors. So you will see us typically have a full portfolio of instruments that we use to give back that cash.
That's Rajesh Gopinathan of TCS elaborating on how they're leveraging their digital portfolio. But moving on, oil marketing companies are the clear winners in trade today, with crude prices posting its sharpest intraday drop in 3 years. While it is great news for the oil marketing margins, a higher inventory build-up perhaps could be a reason why there could be some matter of concerns. And we have Sumit Sarkar who's joining us with more details here. Sumit, how are you reading these cues?
Obviously, despite a weak quarterly earnings, oil marketing companies have gained in trade, and that is mainly due to the steep fall in crude prices. Now, if you see the crude prices, they have fallen more than 20% from the highs, and during the same time period, the 3 state-owned oil marketing companies, they have gained at least more than 20%. So how will this fall in crude prices help oil marketing companies? Well, it will increase their ability to hike the gross marketing margins. Now, earlier, when government had asked them to bear the 1 rupee impact on of the rising crude prices, investors were concerned about the sustainability of the gross marketing margins earned on sale of every liter of petrol and diesel because of this announcement. Now, with this steep fall in crude prices, they can recoup these losses. And if you see the margin numbers, the rise is already reflected in those numbers. Now, in November, the margins have bounced back to 3.5 rupees and 2.5 rupees on every liter of petrol and diesel. Now, this is after a weak month of October, where they were asked to bear that 1 rupee impact and the margins were lower. in the month of October. Now, whom does it benefit the most? Well, it benefits HPCL the most, as their marketing segment contributes the most to its operational number, that is EBITDA. However, everything is not positive when it comes to the falling crude prices and for oil marketing companies. Now, this steep fall in crude prices could result into higher inventory losses for all the three oil marketing companies. Now, that is because OMCs maintain inventories, and if market price of the oil falls, refiners that have bought oil stocks at higher prices need to sell them at lower prices through their retail outlets. Now, if you see in the past, at least in the last 5 quarters, they had seen inventory gains, but before that, that is in the first quarter of financial year 2018, when crude prices averaged lower at $50.8 per barrel versus $54.6 per barrel in the last quarter, all the oil marketing companies had reported an inventory loss of close to 6,200 crore rupees. So this is something that could hurt the oil marketing companies when it comes to the falling crude prices.
Okay, Samit, thanks for joining us and getting us those details. And of course, we continue to track OMCs, which have been on a rise, and their repercussion of crude oil on them. But moving on, let's get in. Firstly, let's just get in a market check, because at this point in time, we have the Nifty and the Sensex declining by around 0.5%. Well, the Nifty banking index is trending in the green at this point in time, but just with marginal gains. And both the Nifty and the Sensex are, well, showing some amount of weakness. But with that, let's get in our technical experts for the day. We have Manav Chopra of Indiabulls Ventures joining us on the show. Manav, good afternoon, and thank you so much for joining us. Let's start off with the benchmarks as usual. How are you reading cues right now, considering the weakness that we've seen this afternoon?
See, the markets have already formed a very good base around the levels of 10,100, 200, from where we've seen a very good rally. What I sense is that, in such a good, post a very good move, I think the markets are currently consolidating its gains. There is a good intermediate low already in place, and, the recent decline that we've seen, I think the correction is mostly done. So, on the lower side, I think it's important to see whether we'll hold the short-term support areas, and once that confirms, we will eventually start moving on the upside. So on the lower side, 10,400 and 10,450 are the important weekly support for the Nifty, and as long as these levels are held, I think it definitely indicates that the markets are trying to form a higher base, and eventually we maintain our upside targets of close to 11,050 levels for the Nifty. Similarly, for the Bank Nifty, we have seen very good weekly reversals happen, and the low that was actually made in the Bank Nifty yesterday, I think that would be the important make or break levels for the index to go forward. So 25,500 to 25,400 are the important crucial supports for the Bank Nifty, and eventually it is also facing some headwinds from the important resistance levels, which coincides with the 200 DMA and its weekly resistance. So once, if the Bank Nifty exceeds 25,900, which is quite likely to happen post the consolidation, I think we maintain our upside target of 26,550. Looking at the entire scenario, we have seen some good bottom formation already happen in the private banks, but also the good PSU banks are also forming a base formation. So I sense that any short-term dip in this market towards the support level should be ideally bought into.
Okay, Manav sir, why don't you tell us about stocks that you're betting on towards the long or the short side this afternoon?
Yes, I have 3 stock picks. My first buy call is on Canara Bank. The stock has formed a very good weekly base formation, and there has been a good reversal on the high time frame charts. There is also a breakout which has happened today with volumes on the intraday basis. So it's a very good buy, as it has a good risk reward ratio. With this, one can buy this with a stop of 237 for an upside target of 290. My second buy would be on Tata Power. Basically, the stock has seen a good reversal formation on the monthly charts, and prices have been forming a series of minor higher tops and bottoms, which has confirmed a medium-term trend reversal. And there is a good range shift happening in this stock after a good 6 to 8 months of sideways consolidations. I sense that the stock has a potential to rally of another 15-20%, but at the current levels, the risk reward is quite favorable. 75 is the stop loss. Maintain an upside target of 82. My last call would be buy on Apollo Hospitals. The prices have again formed a good reversal formation on the monthly as well as on the weekly chart frames, and has been consolidating its gains above its long-term averages. We have seen a positive crossover on the momentum indicators. A stop loss of 1140 is recommended for an upside target of 1250.
Okay, Manav, stay on. So much more to talk about. Let's welcome in a market expert. Anand Tandon joins us right now on the show. The last time around, we couldn't have a complete conversation, so we'll try and rectify that this time. Anand, good having you. Thanks much for joining in. Really appreciate your time and you accommodating this interview request. How are you feeling, Anand? One big bugbear for the markets, which is crude prices, have cooled off. There is no telling what will happen tomorrow. But as things stand, at 65 to the Brent, that one big bugbear is out of the window.
Well, it is certainly better than where we were, let's say, a couple of weeks back. The result season is now past, and I think, has been kind of middling. I don't think it has given any serious direction one way or the other. There have been no, there are limited disappointments and equally limited positive results. So I think the market will continue to remain kind of guided by what the rest of the world does. And especially, movements in interest rates and trade will probably dominate the direction of the market.
Yeah, I look at, there's just so much to talk about within the index today, Anand. I don't think we'll have time for talking about some of the others, but just looking at what's happened within the index components, the crude cool off leading to this bit of a flare in the oil marketing companies. Now that was natural. My question is, would you believe substantial buying into OMCs, if it were to come about, would only come about if that 1 rupee levy on the OMCs would be taken off? Or would the market take the cool off as a good sign of buying into companies which, quote unquote, not too expensive?
Well, it was not really a levy, right? It was a reduction in their marketing margin. And I would imagine that has probably already been reversed. Because, now that the price has come down of crude, I would imagine that they would have adjusted it already. So I think that was a bad policy move and has probably been corrected. The market reaction was fairly severe. So at the lower level, I think it made sense to buy OMCs on a trade basis. However, on a longer term issue, I still continue to think that you're better off buying private sector companies and public sector, for the simple reason that they are a lot more predictable on where they are going. But the short answer is, if you are looking at a good trade, yes, it is obvious that the OMCs were reasonably attractively priced.
Good afternoon. My question is a little to do with macros, actually. What we've seen for the month of October was that inflation came off and, well, it was lower than expectation. Crude has come off quite substantially. On the other hand, we do have the Monetary Policy Committee looking to raise rates. In the near term, what do all these factors mean when it comes to interest rates and their correspondence to equity markets?
Well, I would be very surprised to see the MPC raise rates unless there is a sharp uptick in inflation. Clearly, there isn't enough demand in the market. Inflation is down, and already there was a bit of a hiccup because of liquidity as well, which would have driven down consumer demand even further. And what we are likely to see in terms of the international trade scenario also is likely to do the same. So I would be very surprised to see both an uptick in inflation caused by anything other than policy matters, and as well as an increase in the interest rate. If it were to happen, I think you can expect a further leg down in the market.
Okay. I understand we don't have too much time with you, but if I were to push you into giving me a view on what would you be doing, what would you do now with the exporters, because they've taken a whiff of what the currency movement was looking like. So pharma and IT without exception has been beaten down. Pharma maybe on a case specific basis, but IT stocks have come off too. I don't think the fortunes change because of a 2 rupee movement in the currency. How would you approach these pullbacks?
I think from a trading perspective, what you're seeing as you mentioned, a pullback because they had rallied. IT has been probably one of the best performing sectors in the last 1 year. And therefore, it was natural that if you see domestic growth, signs of domestic growth coming back, you would want to kind of trade out from it. But on a slightly longer term perspective, I think, they are still reasonably priced. I find it strange that something like an Asian Paints, which is of course a great company, trading at 52 times 1 year forward earnings basis, that it will suddenly grow at 12% when it has not grown in double digits for the last 3 years, is something that is justifiable and can go up, whereas something like an Infosys which is trading at 16 times is, oh my God, so expensive because it is not growing at very high double digits.
Okay, Ananda, thanks for joining us and taking us through those views. But let's quickly go across to Sajid Mangat, who is in conversation with Punit Goenka of ZEEL Entertainment at this point in time.
Hello and welcome to Bloomberg Queen. My guest today is Mr. Punit Goenka, MD and CEO of ZEEL Entertainment. Mr. Goenka, thank you very much for joining us on Bloomberg.
It's my pleasure having me.
You know, your announcement last evening took everyone by surprise. So I just want to start off by what was the rationale of putting out that announcement where promoters are going to sell 50% of their stakes?
So see, one is that we did not want any speculations to take over given all the uncertainties of the stock market as they exist today. Secondly, the SEBI insider trading norms itself call for us to declare this, given that it's a very, very significant development when it comes to the promoter family.
You know, the announcement says that you're going to take a strategic review of this entire portfolio, and as a result of which this entire decision to sell 50% of promoter stake comes in. What prompted you to select ZEEL Entertainment?
So I think we look at it from the perspective as to our ambition at ZEEL Entertainment is truly to be a global media powerhouse, catering not just to South Asians but going beyond that audience as well. Our other media assets of the group are confined due to laws and regulations to remain constrained to the Indian market, and therefore ZEEL Entertainment is our conduit for fulfilling our ambitious plans.
You know, we're in an environment where lots of disruptions is happening in media and telecom industry, and there's a convergence which is happening both of that. We are seeing also the fact that people are looking for content players globally, and you know, and in that process, what we are seeing is the ZEEL is selling off its content platform by 50% and going for a distribution platform. What exactly is the global plan for ZEEL? Because ZEEL already is there in multiple countries, right?
So ZEEL is currently catering to the South Asians very, very well. We are repurposing our content for local audiences for several markets. But we believe that we need certain strategic interventions when it comes to leveraging on a strong partner to get our reach beyond the current diaspora of 1.3 billion viewers that we have. We truly believe that a strategic partner can add the technology reforms to our platform to take it to the next level of growth. And if we were to do it on our own, it would take us much longer, and the probability of success in the South Asian diaspora is not at all challenged, but the other areas could be. But therefore, we believe that for the benefit of the minority shareholders, diluting at the parent level the minority shareholder further would not be right, and the promoters are therefore demonstrating their intent, their commitment to this business by saying we are willing to give half of our shareholding, up to half of our shareholding, to the strategic partner.
You know, you mentioned the fact that you want to make ZEEL Entertainment a tech media company. Now, that opens up the entire gamut of who could be the investors, and in the investor call as well, you were trying to highlight what could be the potential, you know, profile of that investor. Since South Asia is, you already have a good hold on South Asia. The regions left is Europe and America. So the potential partners would be from those regions?
Well, Europe, USA, even China is a big market which is still untapped by us. So it could be anywhere.
So you're saying that you're open to Chinese internet companies taking up 50% of your promoter stake, or maybe...
We want to first see what is the value addition that any strategic partner wants to do to our business.
No, because you mentioned in the con call that you already have some proposals which have come in.
We have interests that have come in. There are people who...
What is the profile of those interests which has come?
They are tech companies largely.
Largely with no content backing.
Well, they have some content, but not enough, I guess, for the Indian diaspora per se.
Okay, and you expect the entire thing to be completed in 6 months period, right?
We are expecting at least binding offers to come in and binding deals to happen by that time. Then, depending on the profile of the strategic partner, we may require certain regulatory approvals, etc., which may take slightly longer.
Because in the entertainment space, you have up to 100% stake allowed in FDI, right? And any strategic partner that comes in, if you say 50% of promoter holding is going to be somewhere around 21% odd, that doesn't give them either a strategic position in a company or decision-making position in a company. So are you open to increasing if the partner says so?
At this stage, no. I think we are looking at an equal partnership, given that we've managed to build the business to this level on our own. And I would expect any strategic partner to give us show us that respect, that we are capable of addressing the South Asian market in a manner that we can continuously expand. And the value that they add to us is to take us beyond the South Asian.
To make Zee Entertainment a tech media company, you will need to have an infusion of capital or investment in technology, right? Even if the partner comes in, the investment has to happen in the company to expand its reach. If that is the case, then promoters will again have to build in that kind of or bring in the capital for that purpose, right? To maintain that.
So the tech part of the business will be done at a step-down subsidiary, which is ZEE5.
Okay.
Right. So from that perspective, the promoters may choose to bring capital back into the business, or we may dilute down at the subsidiary level, giving higher control to the strategic through a step-down approach.
So why not look at a strategic partner for ZEE5 rather than Zee Entertainment?
Because of the intricacies of the content linkages between the two. Because ZEE5's dependence on content is largely through ZEEL. And therefore, the times that the strategic partner at ZEE5 level would want, it's easier for us to bring somebody at ZEEL level who buys the story of ZEE5 along with Zee Entertainment.
You know, the press release was very clear on the fact that the group as a whole is looking at priorities of capital allocation. I just wanted to know what is the realignment of these priorities, because on the roads you're trying to cut down your road projects, solar and transmission you're trying to sell it off. Then there are very little amount of infra projects left within the SL group, except for the SL Propac and other mining and other entities which are there. So what is the new priority of capital allocation for SL group?
No, there have been, you see, SL Group considers a lot of businesses going forward. We are a large family, and therefore I'm not at liberty to diverge those things. We did talk about that we considered one business called the semiconductor business.
But you said you'd need more capital for that, so you didn't go for it.
We didn't go for that.
Yeah.
But there are enough other new age media businesses, tech businesses that the group would like to consider. And while we are restricting this conversation to the Zee Entertainment strategic intent, I think the SL Group conversation should be another conversation separately.
No, I understand that, because I just want the investors to understand the capital
so the two are not linked.
They're linked in the sense that your entire foray into other segment is backed by the strong balance sheet of Zee.
No, they're not, sorry.
In terms of shares have been pledged, or, you know, every rating agencies, say that it's backed by a flagship brand, which is Zee, or a Dish TV, which is...
Well, if they say that they are judging the company in the wrong manner. Yes, the pledge do stand, and they have gone up beyond what is comfortable levels for us. We have already put in a plan for deleveraging the group from the pledge levels, as I talked about during my conference call as well, where the assets that you just talked about, which are being divested. From that perspective, the two are to be considered very, very independent.
So, can you give us some flavor of how big is the SL Group in terms of revenues and debt? Because that was one of the concerns which was raised in the con call as well, right?
Again, I think we are digressing from the discussion of Zee Entertainment.
There will be questions raised on why suddenly it is happening. We know infra is a...
Well, if the people have made up their mind that this is happening for a certain reason, I can't help it. I'm trying to project to you that this is happening because we want to bring a strategic partner for the betterment of Zee Entertainment. If people want to believe otherwise, I can't help it.
No, I just wanted to understand one fact of it, the capital allocation policy which you have brought in from a group level, and I know you will talk about it. Is it anyway linked to a broader succession planning within the group?
What do you mean when you mean succession planning?
In the sense that, to align...
As I said, it's a large group, right? And we have a lot of family members, and we will diversify into several businesses going forward. We are not going to stop at where we are today. So for that, if capital allocation needs to be realigned, it will be realigned for 100%.
Mr. Modi was talking about that it's going to be a bid-ask kind of bidding, which will be there. Basically, it's a road show where the potential partners will come in. How confident are you about the kind of technology partners who are going to envisage interest and the kind of global reach? Because that was one thing which you emphasized in the call, that global reach would be, and technology will be the key things to decide on who we interact or go ahead in the
those two will be the prime objectives. Beyond, I mean, the bidding piece is a separate matter altogether. Our first alignment is who brings most value from the two angles of technology as well as the global reach for us. And that will be the deciding factor.
So is there a model which you're thinking in your mind, think that I want a Z to be a modeled on a Netflix or a Amazon or be a internet-based Alibaba kind of model?
No, there is no...
There would be some strategic discussion would have happened saying that let's model the company for the future in this manner, right?
I think we are still too early to talk about those details, but we can divulge more as the things progress further.
Mr. Goenka, thank you very much for joining us.
Thank you.
Thank you. Thank you.
That's Punit Goenka, of course, talking. And now on to one more quarterly earnings. Motherson Sumi reported a mixed set of numbers. Let's cut across as Vivek, Chaand, Sehgal speaks to my colleague Yatin Mota.
I think it's almost similar. Revenues within India are up 12%, outside India are 11%. We're about 92% or something like that outside India. So really the growth is almost similar all over the world. We are very, very happy with the way our customers are performing, and with the result we are doing even better and better.
And sir, talking about the standalone business, we have seen 8% revenue growth for the standalone entity. However, this time, if I look at your investor presentation, the absolute EBITDA was down on a year-on-year basis. So, what led to this compression of operating performance? Is it because of higher raw material costs, or in general the costs were higher for the standalone operations?
Absolutely. I think there is a lag of, the copper and dollar and all these particular things have an impact on the standalone portion. And you have 3 months kind of a lag that's happening over there. We are sure that within the next 1 or 2 months, 3 months, or max at the end of the year, all our customers would have settled up the whole thing. And the numbers would look much better at that time.
Okay. Okay. So talking about PKC, and this time, you have also included 2 months performance of Riddle, your later acquisition, in terms of the accounting. How do you really see, the operating performance of PKC from here on? How has really Motherson Sumi digested or integrated this new acquisition of Riddle?
Well, I think if you look at it, PKC has done... its revenue growth is about 12%. Its growth in EBITDA is 33%, which is very much in line with what we are looking at PKC to do. We are taking out all the low-hanging fruits, and now the medium range fruits are now in target area. So I think there is going to be a phenomenal improvement in ROCE in PKC in the coming years, which is going to be exactly to what we wanted. We are patient with the new companies, because ROCE is all about attitudinal change. You have to change the attitude of the people, make them think differently. And in that particular thing, we want to be sure rather than be in a hurry. So we are very pleased with how MWSI, PKC, all the companies which are there in the group, how they do it. You look at SMR as well. I think SMR and the standalone business have reported a very robust financial results. Even though in SMR the growth has only been 1%, but the EBITDA has grown by 5%, which is fantastic. And this is after giving the discounts and all that, Okay. So I think overall the group is doing very, very well. Our order book has now gone up from 129,000 crores to almost about 165,000 crores. So, this is just at the SMRP BV level. So we are very happy that, the customers' confidence on Motherson is growing more and more.
Okay. I was coming to that point regarding the order book, and you reported a very strong set of fresh orders for the quarter gone by. My question to you, Mr. Sehgal, is that how is really the auto market shaping up? Is there more demand in the smaller passenger car vehicle segment, or the luxury car market is equally doing well in terms of order intakes which are coming in from OEMs for you?
So I think, this particular thing is what we have been trying to explain time and again. The car makers are really trying to come up with new ideas which the customers want. Okay. This is all about the interiors, the exteriors, the facilities, the features that the car is given. So that leads to very fast changeover of models, model upgrades and things like that, which is excellent business for Motherson. So we are, if you think about it, 6 months ago when we had given you about 129,000 crores, we've removed 21,000 crores from that and added another 40,500 crores as new orders. So this is clearly vindicating what we have been trying to say, that the car makers are wanting to come up with newer and newer models and newer this thing to offer to their customers. So we don't see any reason why people should be very worried about automotive industry in the world.
And sir, talking about SMP, you said that the revenue growth was 1%. But when I look at SMP, the revenue growth was 4%. However, we saw a decline in the EBITDA. Of course, there are startup costs which have clearly impacted the performance. But even if you adjust for that, what was the key reason for decline in profitability? Was it only the raw material costs which have been increasing?
No, I think in I was talking about SMR.
Yeah.
That's the mirror company.
Yeah.
That has grown
SMP.
1%, but the EBITDA has grown 5%.
SMP has grown 4%.
is the interiors and exterior business of Motherson. Yeah, that has grown 4%. But what I'm trying to explain to you is this is probably one of the last quarters where, the current quarter where we are at the moment, November till December, probably would be the last quarter where there would be some kind of an startup cost and all that, because we are now filling up the order book of what the customer is asking us to do. But from January, the whole cars will be launched and everything, and then you will see the real impact of what we are talking about, when you're talking full production, and then the full costs of the factory are also getting absorbed in that. So that is the thing which happens till the launch happens. We are sure that in January the numbers and everything will start to look up much better, because the full, almost full sales will also start to show up. This particular quarter we have already removed cash commit, because we've started small billings over there. And next quarter, I think you will see the Tuscaloosa also being removed. So hardly any new startup costs will be there. So you will see the full impact and the profitability of SMP coming up in front of you.
Okay, good to know that, Mr. Sehgal. And one final question on your ongoing expansion plans. I was reading a various and a variety of analyst reports, and most of them were quite gung-ho on the expansion plan and the kind of execution Motherson Sumi has done. So if you could just appraise us on how really are the expansion plans and new factories shaping up, and are you on track in terms of starting production in those new facilities? And if you could just update us on the new Mexican facility and the American facility, and how exactly are things shaping up there in terms of execution and the launch of production?
Yeah, I think last quarter we had already put in front in public domain that in the last 3 years, Motherson has set up 21 new manufacturing plants. That tells you as to what kind of growth that Motherson has got. 21 different manufacturing plants. I think people struggle to put 1 or 2 plants. We have done 21 of them. But we have done so at a profitable way. The global profitability of Motherson, because the only share that's available for people to buy is Motherson Sumi. That has shown growth in the top line, has shown growth in the bottom line, and yet 21 new plants have been come up. Zitaltepec, the Mexican plant, is doing very well. It's already now, nobody wants to talk about NAFTA anymore, or the new American, Mexican, Canadian thing. So that particular thing is starting its journey in a very, very good way. Kecskemét is a Hungarian plant that has also started off very well. Tuscaloosa is the last plant, which is a massive plant, which itself will do about $450 million worth of contribution to the group. That will be fully operational from the January quarter. So I think we are almost at the end of the pain of Motherson for the growth on the new plants and things like that. So really looking forward to all our teams and for them to show you how good they are in their performance.
Good news, got a promotion and a damn good raise.
Congrats, beta.
वाह, raise? अब तो insurance policy ले ले.
कौन सी कंपनी से लूं?
Choose वही जिस पर हो पूरा भरोसा.
That's good. But आज की generation wants everything online. Easy premium payment options, loan facilities और wide range of products.
पापा दीदी, I will decide. Just send your links now. तुम दोनों भी ना. Same choice. LIC.
LIC trending with times. 62 सालों से हर generation की पसंद.
It's not about the award. It never is. It's about what went before and what came after.
It's about getting recognized for the trust and confidence the customer has shown on us. We actually strive for it.
It's about the brightest ideas and cleverest implementations. It's about innovation.
It's about impact for manufacturers and help for shoppers. Tangible, meaningful impact for manufacturers who innovate and genuine help for shoppers looking for the best new things on the shelves.
It's not about the award. It is about standing out. It's about being a giant even if you're really, really small. It's about picking the leaders of tomorrow, today. It's not about the award. It's about competing.
It's about an unbiased, countrywide, face-to-face consumer survey that is unique and provides relevance and differentiation. Essentially, we're adding something to the marketing arsenal of product teams.
It's about doing one's best and raising the bar each time.
So it's about the end customer. You know, if you have that clarity, what is this need that you're trying to solve for the end customer?
About exceeding expectations. About going all in. Coming. Product of the year.
It's about feeling good that we are associated with Product of the Year. This is our 10th year.
30 years of finding brands that capture a billion.
Okay, 27 minutes left for the markets to end trade, and we are trading again in the green. So there's been a bit of a recovery, I must say. All marketing companies doing okay, but I want to pull up 2 or 3 names. Maruti Suzuki is up about 3.2%. HUL is up about 2.7%, so that is aiding. And look at the banks: ICICI, IndusInd, HDFC Bank. There is this private sector banking names which are doing rather well for themselves. Rahul Mohindar joins us. Manav Chopra is with us. Let's just get a couple of technical perspectives before we do Fab 4. A bit of a delay there, but maybe warranted because of the way the markets have bounced back. Manav, you've been waiting by. Just a quick perspective. These last 20-25 odd minutes, this uptick that we're seeing in the Nifty, does that or any of these heavyweight index names which have made a good move today. Are those good enough for a trade?
Absolutely. In fact, the names that you mentioned, ICICI Bank, IndusInd Bank, even the HDFC Bank, I had also mentioned earlier, when we're looking at the bank nifty, the private bank seems to have formed a very good low and are suggesting further move upside. Specifically ICICI Bank, a clear breakout that happened yesterday, and we are seeing good follow-on move today. And even IndusInd Bank, if we see IndusInd Bank, at least on the weekly perspective, the prices are trying to form a good low base near the lower levels. It's forming a series of higher bottoms. So the stock is very well poised to see rally towards 1600, 1650 odd. So this would add further throttle to the banking index, and even the HDFC Bank is also forming base. So I think for the near-term perspective, definitely Bank Nifty is a good trade to take on the upside. You can see another 600 to 800 points rally, and specifically if I have to pick one, I'll definitely go with the IndusInd Bank.
Yeah. Rahul Mohindar is with us as well. Rahul, good having you. Thanks much for joining in. An index strategy, Rahul. I mean, maybe it was relatively easier at 10,000 to call for some bit of an uptick, though I know it would have taken some guts. But at 10,500, 600, with some portion of the move behind us, what would you be doing on the index for the current series?
Good afternoon. I still maintain that positive stance. I came in last week as well, and I mentioned that the stand really has to be positive. We might be slightly neutral to positive, if I could put it more specifically. But the banks is where the action is. I still think we're kind of headed for much higher levels. 26,800 to be precise is my Bank Nifty target. There is some near-term resistance at the current level or closer to 26,050 on the Bank Nifty spot. But I think that having cleared through, we should clearly move to 26,800. 25,600 is a clear stop loss to work with there. Nifty too, we continue to be positive. We're stuck in that 10,400 to 10,700 odd band. But again, there's nothing negative on the charts. There's nothing which really disturbs me. I would get disturbed only if a level of 10,400 breaks down. I think until then, we'd at least be able to say we are clearly in a neutral mode, and we could further have an upsurge past 10,700. So in the main, I would say we're more of a hold than anything else.
Okay, let's bring in UPL, because we have plenty of questions there as well from our viewers there. And if I could actually take a tech check with Manav on this one. Manav, UPL is now advancing around 3%. How are you reading cues on this one?
See, the prices have already seen a very good move from its recent close of 590, and at the current levels you may not see a very good risk reward, but somebody who is already holding UPL should continue to do so. The stop loss or trail stop loss for this should be at 720 on the lower side. Most importantly, there has been a good monthly breakout, so as long as the prices hold above the levels of 700, 720, I think the prices are likely to rally towards its all-time highs in a longer time frame. So I think in the near term we could also see another upside of 10 to 15%, but ideally wait for a short dip towards the support levels to initiate fresh longs.
Okay then, I'm going to go back to Rahul and talk about his stock ideas. Rahul, if I'm not mistaken, you've got calls on Maruti and the other one is on HDFC Bank.
Yeah, following up from last week as well, again, I was bullish on Maruti, continue to be so. 7,500 remains our first target on the stock, where we expect some resistance to come in. So even at current levels, it's a good trading buy, 71.80, strong support. So I'd like to keep stops below it and trail this position higher up. I think this is really in for a lot more, but if it's just the near term in concern, then 7,500 is a target. HDFC Bank, we think should clearly from a trading looking of levels of 2000 to 2010 coming on the stock in the near term. Again, we are bullish banking. It's really hard to pick within the names, but I would say HDFC Bank, ICICI Bank, both warrant a buy, even though they've seen some strength today.
Okay, it's that time of the show where we get you the Fab 4 stocks of the day, and as usual, we have Yash Upadhyay joining us to give us that list. Yash, good afternoon.
Good afternoon, Agam. The first stock on my list actually is Ipca Labs. That one came out with a decently good set of numbers. A 15% growth in the top line coming in at about 998 crore rupees. A 24% jump on the bottom line at about 120 crores. And all in all, margins too were better on a year-on-year basis. So good set of numbers there. It's up about 4% odd. Tata Investments is up almost 13.5%. It had rallied more than 18% today after the company announced that it would consider the proposal of a share buyback at its board meet later in the week. Falling crude prices is good news for the aviation sector. Remember, OMC is featured on our list yesterday and today is the aviation pack. So Interglobe, that one is up about 8% as crude prices overnight fell close to 6% on account of a weaker outlook for 2019 and higher crude inventories. And the last stock I want to highlight is AU Small Finance, up about 8.5% as the stock gets included in the MSCI Small Cap Index. Volumes too significantly higher over the 20-day average. Back to you.
Interesting. Thanks a lot for that. Actually, Interglobe Aviation is the other one, right? I mean, just these kind of moves that you're seeing in the aviation stocks, just quite stunning, really. Lancelot Cunha with us as well. Lancelot, good having you. Thanks much for joining in. What do you think, aside of a flash in the pan move or maybe a small trading move? Okay, Lancelot, just hang on. I believe Dr. Pawan Goenka has just started talking at the M&M post-results press conference. Just need to cut across to that for a bit.
It had gone up as high as 86, but now it's back to almost 70. So we had gone out of sort of safe zone. Now we are back in safe zone. I hope that we stay there. Second one was on exchange rate. Again, nobody had expected the kind of depreciation that happened to the rupee. We are slightly on the rebound mode now. We'll see where it ends up, and we're at about 72. Perhaps in the range of comfort zone. Anything above will be out of the comfort zone. Third is on monsoon. A lot has been talked about monsoon. 91% LPA is what everybody talks about. But what's more important is that 85% of agriculture land had normal monsoon. And therefore, monsoon has not had what I would consider a negative impact on agriculture output. Our estimate, in fact, government estimate, are that the output of Kharif will be slightly higher than what it was last year. And
that's M&M. Okay. Now, as I said, Lancelot Cunha is with us, Manav, Chopra and Rahul Mohindar is with us. Last 20 minutes, we'll have to play a bit of a rapid fire here because a bunch of stocks are moving around. Lancelot, I'll start off with the question that I wanted to start off with. Interglobe Aviation, 1054, up 8%. Jet Airways, bad news. Bad results has still reacted positively the last 2-3 days, arguably because of crude. Would you be a buyer in the aviation companies?
No, actually, irrespective of where crude is, I would not be a buyer because you cannot really see these airlines generating profits on a sustained basis. So from a long-term investment perspective, it's very difficult to make money consistently investing in airline stocks. And that's why I would not stay as a buyer in these stocks.
So not a fundamental buy. I think maybe there's some issue with Lancelot's audio. Let me just get in a technical perspective in the meantime. Not a fundamental buy, but on the charts, Rahul Mohindar, if you were to look at the trades in an Indigo, a Jet, or maybe a Spice Jet, would you be enthused to maybe take a trade yourself?
I would look at 1110 to 1130. That's broadly my target on Indigo. So it's really short term. I mean, we're looking at this as a small percentile move. And, when you look at the risk is to reward, doesn't really warrant it. Jet, an absolute no. When I look at the weekly charts, when I look at slightly longer term outlooks, I am very worried on this one. I would caution investors from getting in at these levels, even though we've seen a bit of an upsurge. If you do want to take a trade on such a stock, 220 has to be a clear stop loss if you're looking at an investment profile.
Okay, so if you leave aside all the nifty top gainers, and disregard all those which are moving on account of the movement in oil, we do have likes of Ultratech Cement and State Bank of India also advancing. So I want to pull up Ultratech Cement right now because I bet a lot of traders out there are well putting bets here as well. That's up around 2% today. Manav, can you come in on Ultratech Cement? How are you reading cues on this one at around 3,900 rupees per share? What would you do with this one?
See, the prices are very well poised. It's in a very good momentum. Has seen a very good weekly breakout confirmation with volumes, and the oscillators have entered into a buy mode. At the current levels, I suggest one should wait for a short-term dip, because the support for the stock lies around 38.50 to 38.70 on the lower side. I think that would be the right level to enter. And eventually, I think the way the structure is panned out, the prices are very well poised to test the levels of 41.50 to even 4200. So ideally, since after such a sharp rally, usually the prices will consolidate. I think it's just keep a very close eye on the support levels, and overall the stock is in a bullish structure, so it's a buy on dips.
Okay, the other stock that I wanted to address was, of course, Sun Pharmaceutical, because that's the top loser on the Nifty. Rahul, and if you can come in on this one, would you initiate fresh shorts even at these levels after the kind of correction that we've seen in Sun Pharma yesterday and today?
I think what we all need to understand is, from a risk-reward angle, if you're going to be selling on a day that's kind of 8% down or virtually, the odds are going to be slightly against you. The reason I would not sell, 495 to 500, very strong support. So, in the greed for the next 30 odd rupees, you're going to be risking a bit on the trend. So very high volumes today as well, support approaching. I think keeping all this in mind, I'd like to see how another session or two play out. I definitely feel there's going to be a pause. There's going to be some profit taking between 495 to 500. So I would not short at these levels. In fact, I'd wait to square up any shorts probably as we dip lower.
Interesting. Some movers in the last few minutes of trade, and want some views thereof too before we get in what dealing rooms are recommending in the session today. JK Tyre has inched up a little bit. Grove Finance has inched up a little bit from those low levels, and Future Lifestyle is trading, I believe, at the high point of the day. What's really moved is Dilip Buildcon in today's session. The numbers notwithstanding, the stock has recovered quite smartly from the lows of the day. Is trading up about 10% higher. Some of these freak trades, Manav, Future Lifestyle or a Dilip Buildcon, just suddenly out of the blue, you have some very strong moves there. How would you trade them, if at all you would trade them?
See, I think, specifically about these stocks, they have definitely seen a very good breakout, and risk-reward ratio is not favorable at the current levels. And most probably even the oscillators for these stocks are still in a range-bound session with no confirmation as yet. So for me, at the current levels, I will definitely give it a pass. I would want to see some more confirmation coming, because the stock is still forming a base formation. So at the current levels, I think one can still avoid it, and eventually if there is some more weekly breakout confirmation, then probably get into it.
Okay, well, watch out for some of these counters too. Strange Future Lifestyle doing what it is doing. But I think if I just look at, just before getting what dealing rooms are recommending in the session today, if I just look at what's now on the gainers list, HP, BP, IOC are not occupying the top spot. HUL, in fact, is now amongst the top 4. Asian Paints is amongst the top 4 because the OMCs have cooled off. UPL has a 3.5% uptick too. So strong moves out there. And IT continues to grind lower. Strange, we haven't had a chat on Nifty, IT and possible trades or any of the large cap IT names. We'll do that in a bit. But before that, let's get in Darshan Mehta to talk about what dealing rooms are recommending in the session today and what is he gathering from his channel checks. Afternoon, Darshan.
Good afternoon. And one of the numbers that will be reported today is United Breweries. It's managing to hold on, hasn't moved much in today's trade. But nevertheless, the street believes that this time around it could report decent set of numbers. So that's the first stock. The next stock that dealers are talking about include an Indigo. Again, the way crude has moved up among the aviation pack, again, HNI is indicating that the best bet right now would be Indigo. And finally, I believe we spoke about it, Maruti is one of the counters which has managed to, again, from 6,600 or 6,500 levels, it's moved up all the way to 7,300. Some of the large domestic mutual funds are actively accumulating Maruti. So that's what I've heard.
Well, absolutely. And of course, we have been talking about Maruti, as Darshan has spoken about. Darshan, thank you so much for joining us and giving us an idea about what the dealing rooms are talking about this point in time. But once again, let's talk about, a few movers and shakers. And I think we should address Ashok Leyland as well, considering it is the top NSE 500 loser. It's down by as much as nearly 11% at this point in time. And I believe we also have Lancelot with us right now. Lancelot, if you can hear us, how are we going to deal with Ashok Leyland? What would you advise our viewers to do with those who are holding on to Ashok Leyland and those perhaps who would want to, well, move into Ashok Leyland at some point in time?
Well, I think, Ashok Leyland has been a good company, and continues to be a very strong company, especially in the commercial vehicle market. So I would not really write it off merely because the CEO has resigned, although he has been there for 14 years and has contributed significantly to Ashok Leyland. I think there is a possibility that you will see a new, equally competent, maybe CEO getting appointed. So maybe one should look at it from from an opportunity, and if you're willing to take a little long-term call, then one can start to accumulate Ashok Leyland, because from a fundamental perspective, the growth in the CV market has been fairly strong. We've seen Ashok Leyland improve its export growth as well, and there is the defense contracts also, which will play out over the next couple of quarters. So I think there are a lot of positives for Ashok Leyland, and merely because the CEO has moved out, I think you really can't sell off the stock on that basis. One can look at accumulating it even at these levels.
Looking very wobbly today is Ashok Leyland. What would you do with a Sun Pharma, Lancelot?
Well, I think a Sun Pharma will require a little bit more time before one can really invest, because you've seen the stock also move up significantly from its lows in anticipation that you'll get better results going ahead. But this quarter also we've got pretty difficult results, and while things are looking good or better from a US perspective for most of the pharma companies, they're still not out of the woods. So it's going to be a long drawn recovery. So I wouldn't be in a hurry to buy into Sun Pharma at this point in time. If there is maybe another correction and it goes down another 10-12%, then one can again start looking at it as a bargain buy at those levels.
Okay. 320, Lancelot, stay on. So much more to talk about. Sun Pharma, and we already discussed how 4% down yesterday, another 7% down today. I think at some point of time, the markets will start wondering as to why is it that the commentary is positive and the delivery isn't. This week, about 13%. Cipla, last 7 or 8 days, about 15%. Large cap pharma has been taken to the cleaners. We've talked a lot about the gainers. We'll talk about some of the losers now as well. But before we start talking about them, closing strategies from both our experts. Rahul, Mohindar, to you first. Your top closing strategy today.
I think clearly banks is the way I'd like to go. So I'd recommend buying into ICICI Bank as well as HDFC, as I was pointing out earlier. I think ICICI is headed to about 380, 385. I'd keep a stop loss of about 362 and buy ICICI.
What about you, Manav?
See, at the current levels, the kind of a breakout that HUL has witnessed, and the prices have, seen a bit of a cool off from its intraday highs, it definitely gives a very good trade setup at the current levels. A stop loss of 1685 on the lower side for an upside target of 1740.
Okay. It's interesting. What's happening, one, to the pharma names. Also, what's happened to JSW Steel in the session today? I think the stock has come off after starting off. That was JSPL and Tata Steel. Both of them have started off well. Not so much for JSW Steel. Excuse me, I take my words back. That has been down today. And technology. I'm wondering, while the markets may be looking okay, and you're looking to go all out on banks, Rahul, how come no mention of large cap IT? These stocks have pulled back quite strongly today.
I think you kind of hit the nail on the bud there. I'm actually negative on IT. In fact, last week, if you recall, I put out a sell on Infosys. I still am a little bearish on stuff like Tech Mahindra, as well as TCS. I think the next 4 to 5% is going to be sliding down. So just to rattle some numbers, Infi 620 is our target. On TCS, we're looking at 1810 as our near-term target. On Tech Mahindra, we're looking at 640 to 630 as target. So we are negative on technology. It's the one space I would like to go short in.
Okay, if you guys can also come in on Page Industries, and I want to take a look at that because that stock is also down as much as 4% today. Of course, the company announced its earnings, and ever since it has been on a downward spiral for now, at trading near day's lows at around 27,700. Manav, what would you do with Page Industries now? How is this one looking in the charts now that the the event is behind us?
See, the prices have actually breached its crucial support levels and has been trading below 29,000 decisively. Most importantly, past 3 days decline has actually breached its 20 days consolidation pattern, which confirms that the prices are still in a lower top lower bottom formation. Quite high, likely the prices would eventually test its recent lows of 26,500 and even eventually break that. So for the near term, maintain a negative stance into this. Eventually the prices would be testing its lows of 26,000 to 26,000 odd 5 levels. Overall the trend for the stock is quite bullish, but it's just in an intermediate correction trend. So another 5 to 8% decline is quite likely on the cards.
All right, much has been spoken about OMCs, but I also want to address stocks like ONGC and Reliance Industries. So, Lancelot, if you can come in on this one, how would you, well, perhaps deal with something like an ONGC, Reliance, and perhaps an Oil India?
Well, I think from the OMC pack, I actually like, BPCL or HPCL. Because the oil marketing companies, while the current situation is that they have to bear 1 rupee of subsidy, I think they will, with the fall in crude prices, there is a greater chance that the government will lift this 1 rupee levy for them, and that should improve their profitability going forward. I also think that from a longer term perspective, both these companies have got significant amount of cash with them, and they are deploying it in acquiring new assets or setting up new refineries which will add capacity to them. So as long as the demand for petroleum products remains strong, I think these companies should do well. So those can be looked at from a long-term perspective. I think ONGC is more of a the upstream exploration. And with crude prices sort of falling off, plus ONGC has to make very large investment in drilling infrastructure, etc. I think the capital, deployment and the return on capital will come off. So at this point in time, maybe it doesn't look that attractive as an investment.
Lancelot, we'll leave it at that. Thanks much for taking the time out and joining us and giving us that perspective. Really appreciate your time. That's Lancelot Cunha. Just trying to think of one factor as to why the banks would be in focus. Nifty Bank has done reasonably well today. Not to say that this will last, but last summer to this summer, very volatile year. Yeah. It's very unusual that you don't find an HDFC Bank and a Kotak Bank in the list of gainers, right? Yeah. We've discussed this on the market wrap as well so many times. Right. Yeah. We're finally seeing some bit of movement there, though not in Kotak Bank. That's still down about 4% as the deadline nears. But HDFC Bank certainly in the thick of things, ICICI Bank, IndusInd Bank certainly in the thick of things. So a bunch of these private banks are making their presence felt today. After a while, we're seeing them make a concerted move together.
Right. Well, I was actually curious about Kotak Mahindra Bank and how that one looks on the charts, because once again, you will have plenty of investors who may just want to get into it if you keep the event aside. So actually, I'm going to go across to Rahul and take his view on Kotak Mahindra Bank. Can we also pull up the chart here and take a look at where it's currently trading at? So it is at around 1129 odd, and of course it's declining by as much as 3%. Rahul, what would you advise your clients, perhaps our viewers, to do with Kotak Mahindra Bank now?
I think what's got established in Kotak Mahindra Bank is the fact that 1,095 to about 1,100 is very strong support. If you look at right from the 10th or 11th of October, we've taken support between that 1,095 to 1,100 maybe 3 or 4 times now. So it's important that Kotak Bank maintains it. If you're holding on Kotak, you need to make sure you use a stop loss on a break of 1,095. I must admit, within banking, there's a lot better choice if you're trying to take a fresh trade out there. So probably swapping out to an ICICI, if you're looking at a trading perspective, is a better bet to me. But in the main, I would hold with 1,095 being a stop.
Okay, Rahul, Manav, stay on. We'll just take in final thoughts from you post-close. But let's start wrapping up the markets. I'll bring up the indices and the large caps before I hand it over to Agam for what's happening at the mid cap end of the market and the entire market at large. But flattish close, but it belies what happened internally because it was a fairly choppy and volatile trading day today. The bank nifty, about 0.5% at a point of time, was nearly 1% higher. The mid caps and the small caps too have had a choppy day today, ending about marginally lower. But I must say, today has kind of broken that perfect correlation wherein crude would fall and the index would rise, or the crude would rise and index would fall. There is a bit of a difference out here, at least for the mid cap, at least for the large caps. What's happened? Bring up individual pockets. BP, HP, IOC doing well. UPL and Maruti in today's session doing rather okay for itself. And the crude fall benefits also getting extended to a stock like Asian Paints, up about 2.5%. ONGC about 2.5% higher as well. SBI bringing up the list of stocks on the banking side which have done well. What's not done well? Pharma and IT. Sun Pharma 7% down, and GAIL in between. But Tech Mahindra, HCL Technologies, Kotak Bank was one of the top losers as well. In fact, the second top loser today. TCS about 3% lower. Infosys about 2% lower. Yes Bank about 1.5%. So clutch of IT names. One or two stocks like Kotak Bank, all of them putting pressure on the index. But Agam, what about the broader end of the spectrum? The indices look lackluster, but a lot of stocks moving around intraday.
Yes, and there's some very sharp moves out there too, Neeraj. So I'm going to start off with Ashok Leyland, and that is one of the top losers on the NSE 500. It's down by as much as 10 to 11% right now. And of course, that weakness is not only on account of the weak earnings that we've seen, but also its head, Vinod Dasari, who will eventually stand down from his position. But moving on, after Ashok Leyland, we also have Motherson Sumi, and once again reacting to very poor earnings. And we actually didn't have too much to go with from the management commentary either. That stock's down around nearly 9% in trade too. The Deepak Fertilizers is the other one. That's also seeing some weakness right now. It's down 7%, again near day's lows. But on the gaining end, and once again, we do have a handful of stocks which have gained sharply as well. And we have Dilip Bilkon, which actually not only rose, but actually went from red to the green, and now ending the day at, if I'm not mistaken, at a 10% upper circuit. So watch out for this one. Interglobe Aviation, along with the rest of the aviation pack, also advancing in trade, largely on account of that sharp drop in crude that we saw overnight. And AU Small Finance perhaps might be the surprising one here, because that's where we have seen, well, advances coming through. It did come off from day's highs, but well, it did end with gains of as much as 6% at this point in time at around 569. So plenty of stocks out there to watch out for in well, the mid-cap space. But that said, let's just focus and take a look at how we've seen, you know, these indices will move on an intraday basis, and there you have, that's what you're seeing on your screen right now.
Yeah, interesting. But the intraday name, as Agam said, I think that's the pertinent point, because if you look up the Nifty intraday right here, okay, this screens are a bit jumbled up, but as you can see, a lot of volatility between the crests and the troughs, a lot of red, a lot of green, but fairly choppy and fairly volatile in a narrow band, but fairly choppy and volatile. And I would reckon the same would be true for the Nifty Bank as well. Should come up on your screen, and a choppy and a volatile day for the Nifty Bank as well, because private banks too, it didn't dip into the red because HDFC Bank and the likes were doing well, but fairly choppy and volatile in its own sweet way. But Agam, turnover, volumes, lots to look forward to.
Right, I'll actually look forward to the turnover, and they do look slightly on an elevated basis, not so much in the cash, but certainly in the F&O, and the total stands at around 10 lakh crores. So once again, I'm very keen to watch out for what FIIs have done specifically in the derivatives market. But let's take a look at the contributors too, and considering both the Nifty and the Sensex are closed largely flattish, we'll have some weightages on either side, the gainers and the losers side of things. And it's essentially HDFC Bank and ICICI Bank which have provided some amount of support on the losing end. We do have the likes of TCS, along with a lot of the other IT names, mind you. Infosys is right up there, and Sun Pharma and Kotak Mahindra Bank also actually bearing down on the indices. So some weakness on account of some of these names out there.
And just the market breadth, one last that I want to point out before we get in the final thoughts from our experts. And slightly in fear of the declines versus the advances for the first half of trade, but no complaints, I guess. This is maybe par for the course. Final thoughts from our experts. And Rahul, I'll start off with you first this time. based on what's happened today, and I know you started off the conversation at about 3 saying that you reiterated the point last week that you remain bullish. As an index, what do you think has more scope for returns? Would it be the Nifty Bank? Would it be the Nifty or some other index that you would bet on?
I think very clearly I'd say the Bank Nifty is going to be my #1 pick, followed by the Nifty, which I would say is more neutral to positive than positive. And I'd say least of the pecking order would be IT, if I could add to that. That's the one place where I am a little circumspect, where I think there could be a decline. It could be kind of rupee driven as well. But all in all, the charts don't point to a very stable trend on the IT stocks. So near-term negativity continues to be there on IT. You could balance that out within some heavyweights and names like auto, like you have Maruti, you have a Tata Motors that declined a bit today. Still worth buying into, in my opinion. We should see a short-term flare coming into auto as well as banking.
All right, and Manav, what about you? Your closing thoughts for the day?
See, the markets have actually managed to still hold on to its important support levels. So I think the important levels to look out is, once if we take and we close above 10,650 on the index level, I think that is when you will see some series of an upside coming in the Nifty and also for the Bank Nifty once we close above 25,900. I think looking at the overall structure, we are expecting this breakout to happen on the upside. Besides the banking index, I think the other sector which is showing some early signs of reversal is the power index. We have seen some good reversal happen in the in few of the stocks like Tata Power, NTPC, even the PTC at much lower levels, and most of these stocks are near its good cyclical bottom. So I sense there is a very good risk reward opportunity not only for the short term, for also on a long term perspective. So I think power stocks could be the stocks that for the next 6 months could be one of the underdogs which could see some sort of an outperformance. So this is one of the sectors that we are looking very closely, and we do have a good strong recommendation to this.
Okay, gentlemen, we'll leave it at that. Manav as well as Rahul, Mohindar, really appreciate your time, gentlemen. Thanks for joining in today and giving us your thoughts and your trades as well. I think some of the trades given by Rahul and Manav have worked beautifully in the last 3 or 4 odd weeks. So thanks for that. And with that, it's a wrap on this leg of Countdown from Agam and me and the team that put this show together. Thank you so much for watching.